Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Dazed and confused, investors go on a roller coaster after President Trump threatens to double some Canadian tariffs, only to dial it back hours later. Global levies on all U.S. steel and aluminium imports are set to come into force imminently. Truce agreed. Ukraine accepts a U.S. plan for a 30-day ceasefire after 8 hours of meetings in Jeddah. The White House puts the pressure on Russia, saying it takes two to tango. Plus, second time lucky, South Africa's finance minister unveils a revised budget after the first collapsed in a row over tax. We'll have the details live from Johannesburg. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Jemana Versace in Dubai, but also midnight on the East Coast in Washington, D.C. Why is that relevant? Well, just in the last few minutes, the Trump tariffs on steel, aluminium have taken effect with no exemptions. Remember, just as a reminder, because there's so much noise around all of these tariffs, these are going to be the tariffs applied specifically to aluminium and to steel on all imports from all around the world. No exemptions. Those have just gone into effect in the last minute. So there you have it. Let's switch over and take a look at how the markets are reacting to this news. And of course, yesterday there was so much talk about what the Trump administration was going to do vis-a-vis those Canadian aluminium and steel imports. At one point, Trump posited the idea of imposing 50% tariff rates on Canadian steel and aluminium imports. They moved back from that by the end of the session. And what we saw was a bit of a roller coaster ride for the S&P. Today, we have futures leaning towards the green, however, up 0.2%. So you could say that a lot of this was already priced into the markets. So, of course, the bigger picture is that the S&P is very close to correction territory, down 10% from the peak. In fact, we briefly broke through that level yesterday. Euro stocks futures leaning towards the green as well. A lot of green on the board. But I would point that back to the developments in Jeddah and the fact that Ukraine have agreed to this 30-day truce subject to Russia also signing on to it. So positivity showing up in the European bourses. The USD up a little bit this morning, up 0.2%. Again, tariffs today seem to be positive for the greenback. And then aluminium, of course, in focus, up 0.3%. But year to date, that brings the gains to 10%. And for that commodity in particular, there has been a lot of talk about the imposition of tariffs. Switching over, I just want to point out the S&P pullback, because that was a big theme for the markets yesterday, the last couple of days. And here you can see that if you track the sell-off versus RSI, this would suggest that, yes, even though the magnitude of the sell-off has been quite severe over the last couple of sessions, we're not at severe positioning levels. The RSI positioning measures are not at extreme levels, say, what we got to towards the end of December. So there's still a little bit of a way to go before you can call this an extreme sell-off. I thought that was an interesting statistic to point out. But let's move on and check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, just walk us through what the reaction has been so far with these Asian markets to the imposition of tariffs.
Yeah, I think there's a bit of a knee-jerk reaction. The region's benchmark pairing the climb from earlier in the session. But again, these tariff impositions, not something that markets did not already know. There's a lot of that that's already being priced in by traders. So we're seeing still some positivity and that follow through from the Wall Street rebound. That being said, it is quite narrow. Aside from some of the chip names, tech stocks, consumer discretionary, the recovery in the Asia Pacific looks a bit tenuous. We're also keeping an eye on Chinese stocks as they have been benefiting from the U.S. stock sell-off. Today, it looks like they're struggling a little. We do, after all, have sources telling Bloomberg that these U.S.-China tariff talks are stuck at the low levels. Aside from that, the recently concluded NPC seems to still be fueling that AI optimism. And we also have a conference that's set to get underway tomorrow in Hangzhou. So we're seeing Chinese computing-related stocks, some of them on the mainland, trading limit up about 10% higher.
Avril, thank you so much. That was Avril Hong in Singapore. Let's go back to this top story, though. 25% U.S. levies on steel and aluminium are currently in place. Earlier, Washington backed off on a threat to impose 50% duties specifically on Canadian metals. President Donald Trump says the tariffs will bring in a lot of money into the country.
But the biggest win is if they move into our country and produce jobs. That's a bigger win than the tariffs themselves. But the tariffs are going to be throwing off a lot of money to this country. And we've been ripped off for years by other countries, many, many decades. And they were doing the same thing. But I think we'll do it better. And I think we have a bigger advantage because we really are the piggy bank. They weren't.
Okay, for more, let's bring in Bloomberg Asia Senior Editor Bill Fayez. Bill, good to have you with us. Another day, another tariff deadline. What we know is that these tariffs are going to be applied universally. These are global tariffs, rates of 25%, we think, on all steel and aluminum imports into the U.S. First of all, do we actually expect these new duties to last?
That we saw a little bit of in Donald Trump's first term, and it's something he talked about quite a bit on the campaign trail. I do think these are here to stay for quite a while. Most interestingly, he did not issue any exemptions as these tariffs went into effect. This is a global tariff, as you mentioned. It hits countries particularly hard like Canada, South Korea, Australia, a lot of U.S. allies, frankly. And it's something that perhaps domestic steel and aluminum producers have been generally supportive of, but it's raised a lot of questions within industries, including the auto industry, about how this will end up impacting the prices they have to charge consumers down the line.
Yeah, but let's talk specifically about what happened with Canada yesterday. Again, there was a lot of movement, a lot of talk about potentially imposing a tariff rate of up to 50% on Canadian steel and aluminum imports, only for President Trump to dial that down. What do we know about what went down yesterday between U.S. and Canada?
Yeah, when I went to bed last night, I was expecting the 50% tariffs. When I woke up this morning here in Singapore, I got news that it was back to 25. So that lasted less than a day, that threat. I think there are a couple things at play here. First of all, Canada, I think it was Ontario province, decided against charging 25% tariffs on electricity exports to the United States. That was something that really angered President Trump. And then perhaps you still had the lingering market reaction to all of this whipsaw decisions on, are there tariffs coming in or are there not? So I suspect that those two things combined were enough to get the president to dial back his threat specifically on Canada. But I think it does show bigger picture that relations are going to be very raw between these two historic allies when it comes to tariffs and economic policy for the months ahead.
Yep, it certainly seems like the incoming Prime Minister, Mark Carney, has his work cut out, as we were speaking about yesterday. Bloomberg's Bill Fayez, thank you so much for the reporting there. Now, for more on how markets are reacting, joining us is Kamal Sharma, Senior FX Strategist at Bank of America. Good morning, Kamal. Really good to have you with us on the show. Okay, first question for you. The imposition of tariffs, the actual imposition of tariffs, not just talk of tariffs, but the imposition, is that a dollar negative or a dollar positive?
Well, at the beginning of the year, Jamal, the view was that a dollar positive story would be a backdrop of tariffs against the rest of the world. The US will be relatively immune. What we've actually seen is that trade uncertainty has started to permeate. Business confidence in the US is now starting to wane. Yesterday's NFIB has weakened. So net, the risks are that the dollar is unlikely to be as immune to a global tariff war as perhaps may have been thought at the beginning of the year. We're starting to see this America first trade are starting to unravel with concerns about growth, trade headwinds, and obviously the uncertainty that a global trade war may potentially entail.
Yeah, our Markets Live team, Mary Nicola, made a very good point. And she said, in order for us to see the sustained downtrend in the USD, what you would need to see also is a clear outperformance growth-wise from other countries around the world. How likely is it that we're actually going to see that in the coming months?
Well, last week's events in Europe, we think, are quite seismic. We have been of the view that a positive reform package by the new incoming German administration would be conducive for euro gains against the dollar. The reason why that is that we've seen a significant global flow of funds story into the US. It's all been about AI. It's been about higher productivity in the US. Europe is now offering something which is an alternative to that narrative. So if Europe grows, that is a challenge to the dollar hegemony, shall we say. And you've seen that this week with another leg up in euro dollar in particular, and the euro more broadly performing very well.
Yeah, I mean, there have been so many times I can count in the last few years where people were expecting euro to break through parity. It hasn't actually happened. What do you think positioning is like right now in the euro currency as we edge towards the 109?
Well, we think that positioning has been squeezed, given the move. I think that was inevitable, but we don't think the market is in an extended short dollar position. So our view from Bank of America is that we think these gains in the euro against the dollar can continue to extend, and we're looking for. We've revised our targets for euro dollar as of last week, and we think euro dollar will reach 115 by the end of the year.
And how much is that contingent on what the ECB do from here? And I think the messaging from last week's meeting was that they're leaning towards being perhaps slightly less dovish in the future, given the announcements that have come out from Germany.
Yeah, we think the playbook is actually going to plan at the moment. This is what our European economists have been saying. It starts to become a lot more trickier as we enter into the summer months, Jemana. Now, ultimately, the market has to weigh up two things. We still think that the ECB will cut to 1.5%, but are they prepared to look through that and trade the positive growth narrative that we think is likely to evolve into next year? And I think that's the key thing here. What we may potentially see is a little bit more of a steepening of the curve, just as the market prices in a bit more rate cuts, as we think is going to be the case, but keeps the back end of that curve relatively elevated on the fiscal stroke defense spending story.
Kamal, well, you are an FX expert, so I'm going to lean into your expertise on this. There's been some fringe discussions about a so-called Mar-a-Lago Accord, which would lead to the devaluation of the USD, the coordinated depreciation of the USD, a terming out of U.S. assets. First of all, how likely is it, in your view, that this accord actually does go ahead? And also, what would that mean for dollar's reserve currency status?
So this is a very interesting story, Jaman. It's certainly captured the attention of the investor base. I think the likelihood is pretty low, and for the very reasons that, you know, once you start to look at, try and talk your currency down by implementing a terming out of your treasury holdings, then it generally tends to become self-fulfilling. Now, in terms of what it means for the global reserve story, de-dollarization is happening, and it's happening predominantly via gold holding. So reserve banks are buying gold. Now, this de-dollarization story is a very slow-moving ship. It is happening. What it potentially means is that continues. At the moment, just given the whole geopolitical story, the tariff story, I think central banks are becoming increasingly focused on that geopolitical side in terms of how, where, and how much they have in their holdings at the moment.
Yeah, so interesting. And let's see if anything comes of it. President Trump has a lot on his plate these days. Kamal Sharma, Senior FX Strategist at Bank of America, thank you so much. Well, House Republicans in the U.S. have passed legislation to keep the government open past a Saturday shutdown deadline. The bill will likely need the support of at least 8 Democrats in the Senate to become law. But if a shutdown does go ahead, the White House Budget Office would decide which federal workers are furloughed and which essential staff must continue without pay. Now, coming up, there is a deal in the desert, but will Putin agree? Details on the latest and the Russia-Ukraine ceasefire next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Ukraine has accepted a U.S. proposal for a 30-day truce with Russia in exchange for a lift on its military aid freeze. President Trump says the ball is now in Russia's court.
Ukraine has agreed to it, and hopefully Russia will agree to it. We're going to meet with them later on today and tomorrow, and hopefully we'll be able to wipe out a deal. But I think the ceasefire is very important. If we can get Russia to do it, that'll be great.
U.S. Middle East envoy Steve Witkoff is due to travel to Moscow, where he is expected to meet President Putin this week. Now, joining me now is Honor Ant, Bloomberg's managing editor for Middle East and North Africa. Well, this is remarkable progress from where we were just, what was it, almost 2 weeks ago, that Oval Office meeting between President Trump and President Zelensky. Later on, President Trump labeling Zelensky as a dictator. And now here we are. The Ukrainian side have actually signed on to a truce proposal put forward by the U.S. delegation.
Certainly a remarkable breakthrough, in Starmer's words, as you said, Jumana. From the point of view of Ukraine, obviously the most important thing is that the administration, Kiev, is now back in Trump's good graces, and that's a huge turnaround from what happened just a couple of weeks ago in the Oval Office, where there was a shouting match pretty much between Zelensky and President Trump. Yeah. It also allows Ukraine to start getting U.S. military aid and intelligence, which is irreplaceable for the government in Ukraine if it needs to resume fighting against Russia after this ceasefire, or if this ceasefire does not materialize. But I think most importantly for Zelensky, it allows him to be in a position where he's, in his own words, able to say, I am ready for peace. Yeah. And that's going to be critical as U.S. and Russia try to basically bring this 3-year conflict to an end.
Yeah, and he quite literally did say that. I think he put out a post yesterday saying, we are ready for peace. Now the ball is in Russia's court. And that was the language that Ursula von der Leyen, the European Commissioner, President, put out yesterday. So the deal has the support of Europeans. It has the support of U.S. It has the support of Ukraine. What did Russia do?
Well, we know, we expect Russia to basically introduce some new demands to the conversation. So right now, whatever the conversation has taken place, it has been between the Americans, Ukrainians, and with some presence of some European powers. On the other hand, Russians will need to introduce new demands such as the acknowledgement or even acceptance of their earlier demands, including no NATO membership for Ukraine, the fact that Russia gets to maintain its battlefield gains, so to speak, and possibly new elections in Kiev. Now, whether or not Trump will accept any of those, or they will be part of the proposed ceasefire deal that we've been talking about, that is only going to be clear after Witkoff's trip to Moscow, which you just mentioned.
Yeah, and not just NATO membership, which is something that Trump's team has already ruled out from the beginning, which they were criticized for because they gave up a lot of the bargaining power, but also the maintenance of those peacekeeping troops, which the UK and France have been pushing for as well. So still, it seems like there are a lot of details that need to be worked through. Yeah. Sure. Honor, thank you so much. That was Honor Ant, Bloomberg's managing editor for Middle East and North Africa. Now, coming up, the U.S. Middle East envoy expected in Qatar, where he will try to revive Gaza ceasefire talks. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, attention is turning to the Gaza ceasefire negotiations in Qatar after direct talks between the U.S. and Hamas sparked concerns in Israel and produced little results, Bloomberg understands. Hamas says a new round of ceasefire talks started on Tuesday, with Israel demanding the militant group release half of the remaining hostages in return for a promise to negotiate a lasting truce. For more, let's bring in Paul Wallace, who leads our MENA economy and government coverage. Paul, just run us through the details of what's at stake here.
At stake is what happens with the ceasefire in Gaza and whether or not Hamas and Israel return to full-on war, which would obviously have immense consequences for not just what's left of Hamas, but the 2 million odd civilians in the Gaza Strip. As you've basically said, the talks seem to be stalling, and it seems as if the mediators, the U.S., who are chiefly the U.S., Egypt and Qatar, are finding it very difficult to square Israel's demand that Hamas disarms and steps down from power with what Hamas wants, which is obviously not to do that. The U.S. is even calling for Hamas to leave the Strip. It's pretty unclear whether the U.S. is talking about its leaders or all its fighters or what exactly. But at the moment, it seems as if we're going to stick in this messy impasse, if you like. We've ended phase 1 of the truce. We're not yet into phase 2, which is when serious discussions and effectively a permanent ceasefire are meant to be agreed upon and discussed.
Yesterday, we were reporting that Israel has cut off the supply of electricity to the Gaza Strip alongside the further derailment of humanitarian aid entering to the Strip as well. On the back of that, the Houthis have now said that they're going to resume attacks on ships going through the Suez Canal. What do we know about that?
Yes, so they gave Israel a 4-day ultimatum, and they said if you don't lift this ban on aid going into Gaza, then we'll resume attacks on Israeli ships. The shipping market did get nervous, and we saw the stocks of the likes of Maersk and Hapag-Lloyd rise substantially on that. The feeling being that container charter rates would rise and things. Because the Houthis have in the past targeted non-Israeli ships, probably by mistake. So if they're going to go after Israeli ships again, then a lot of, I think, Western-linked tankers or any tankers of any kind, or container ships of any kind, will avoid it too, because the risks will just be too high.
Yeah, but also emblematic of some of the issues still at stake here with the Houthis wading back into the conversation again. Bloomberg's Paul Wallace, thank you so much. Now, Israel and Lebanon are reported to have agreed to start negotiations on disputes over their land border. According to the New York Times, officials say talks would also include the future of Israeli military outposts in Lebanon and of Lebanese prisoners still held in Israel. AFP, meanwhile, reports that Israel has agreed to release 5 Lebanese citizens detained during its war with Hezbollah. And coming up, Arbroath Group says Trump believes that if other nations are doing well, it must be at America's expense. We'll be getting more analysis on U.S.'s trade policy. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Dazed and confused, investors go on a roller coaster after President Trump threatens to double some Canadian tariffs, only to dial it back hours later. Global levies on all U.S. steel and aluminum imports have come into force with no exceptions. Truce agreed. Ukraine accepts a U.S. plan for a 30-day ceasefire after 8 hours of meetings in Jeddah. The White House puts the pressure on Russia, saying it takes 2 to tango. Plus, second time lucky. South Africa's finance minister unveils a revised budget after the first collapsed in a row over tax. We'll have the details live from Johannesburg. It's just gone 8:30 a.m. across the Emirates, 12:30 a.m. in the New York and Eastern Coast U.S. I'm Jemana Versace in Dubai. Why do I talk about the U.S. timing? Well, just half an hour ago, those global tariffs on steel and aluminium imports got triggered. So the U.S., as of half an hour ago, are now universally applying a tariff rate of 25% on all imports of steel and aluminium. So that was scheduled to happen today. No surprise, but as per usual with these tariff discussions, there was some hope that perhaps the Trump administration may dial back or change their mind. That hasn't been the case on these global tariffs, but it was the case briefly yesterday that at one point President Trump did actually float the idea of imposing 50% 50% tariffs on just Canadian steel and aluminium imports, only to dial it back by the end of the day. So again, a lot of tariff noise. It's very difficult for us to piece all of this together. It was a bit of a roller coaster session for U.S. markets yesterday, but we did see the S&P end up in the red once again, down almost 0.8%. Slight better performance from the Nasdaq, but still also ending the day in the red as well. Today, futures leaning towards the green, though. S&P futures up 0.3%. Strong close look like it's going to be for strong open, rather, I should say, for the European markets, up almost 1% now in futures. And this in direct reaction to the news we got out of Jeddah overnight, and that Ukraine has agreed in principle to sign up for a 30-day ceasefire with Russia. Breaking news there coming out of Saudi Arabia. We're going to talk more about that shortly and the implications. But strong open looks like it's going to be for European markets. The USD seeing a bit of love this morning, up 0.2%, even though we are down 4% year to date. And then aluminium up 0.3%. By the rumor, sell the fact, though aluminium is up 10% year to date as well. Switching over for our terminal chart now, just to highlight for you as well that beyond the price action that we've been witnessing in equities, the sell-off that's been going on there, we're finally beginning to see some creaks show up in the credit market. So take a look at this. This is the U.S. high-yield index spreads. And up until January, even mid-February, we continued to see these spreads tighten. That has all changed in the last few weeks and tells you that this risk-off sentiment is gripping all asset classes and not particular to just equities. So high-yield spreads back on the rise again. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, run us through these markets, please.
Yeah, Jumana, as you know, those tariffs coming into effect at the top of this hour has led to a bit of a pareback in the region's gains. And even though we're seeing the chip stocks in South Korea, Taiwan doing fairly well today, it is really how Australia, as you know, tried but failed to get an exemption. So the stocks are nearing correction there, and the Aussie dollar also coming under pressure. Some of this has to do with that greenback resurgence that we're seeing today ahead of the US CPI. But overall, the mood looks quite tenuous. The recovery in the region in stocks is pretty fragile. And keeping an eye as well on Chinese stocks, as we do, right? They've been benefiting from the US stock sell-off. And even though there is a fair bit of AI optimism. Remember, there's going to be a conference underway in Hangzhou. This is the area where DeepSeek was founded. Later in the week, that's helping to fuel some of these Chinese computing-related stocks, some of them moving by limit up. It's really against the backdrop of these US-China tariff talks that are, according to sources telling Bloomberg, stuck at low levels. So that's really frustrating for investors. And not surprisingly, we're seeing that step down. Flip the board, I just wanted to show you really quickly when it comes to Chinese stocks, what we need to see is this meaningful return of global funds. But you can see the skepticism given these false dawns that Chinese stocks have been seeing over the years.
Yeah, interesting. And also to echo what you were saying about the tariff news being frustrating for investors, we're going to talk more about that with our next guest. 25% U.S. levies on steel and aluminium are currently in place. That's as Washington earlier backed off on a threat to impose a 50% duty on Canadian metals. President Donald Trump says the tariffs will bring in a lot of money into the country.
But the biggest win is if they move into our country and produce jobs. That's a bigger win than the tariffs themselves. But the tariffs are going to be throwing off a lot of money to this country. And we've been ripped off for years by other countries, many, many decades. And they were doing the same thing. But I think we'll do it better. And I think we have a bigger advantage because we really are the piggy bank. They weren't.
Joining us is Christopher Smart, managing partner and founder at Arbroath Group. Well, so much news to talk about today. Let's start with the tariffs. How do you piece together a narrative around what the tariff implementation means for the trajectory of the U.S. economy?
Well, Germana, good to be with you. I think it's very hard to piece together a trajectory just because there's so much uncertainty right now. I think the markets obviously greeted President Trump's election last fall with a lot of enthusiasm about the potential for deregulation and tax cuts. And now it's coming up against the reality of not just tariffs with no exceptions, but real uncertainty about when the next wave of tariffs is going to come, whether this current steel tariff that has taken effect might not get reversed, given the fact that we've had such on again, off again decisions around tariffs. But I think the big thing that has spooked markets over the weekend is the president's interviews where he has sort of suggested he doesn't follow the markets as closely or care as much about the market reaction as I think many investors thought he did. Now, we'll see how that plays out over the next days and weeks, but I think the combination of the uncertainty, the lack of exceptions, and then his sort of lackadaisical reaction to the market sell-off has really spooked investors in terms of their expectations and what they thought they knew about this president.
Yeah, well, technically almost in correction territory. So down, the S&P down almost 10% from the peak. I want to bring it back to that sound that we played from President Trump. And he said, we're going to raise a lot of money from the imposition of these tariffs. And I do wonder whether the tariff imposition is going to provide cover for that potential tax cut extension later on in the year. Is that your read across as to why he's so intent on imposing all these tariffs?
Well, no, I think he's intent on imposing these tariffs because he's always liked tariffs. And I think it's a combination of some different economics book than I was raised with, that these bilateral deficits are so important. And I think it's just a sense that it's also a tool that he can use without much congressional oversight as leverage on a variety of issues, as we've seen, whether it's immigration or fentanyl or other things. But in terms of the money raised, you know, he keeps coming back to that as justification. But of course, once you put a tariff on it, the trade flows tends to dry up. And so you're not raising that much money in tariffs. But even if you did, the numbers just aren't going to be enough to make up for the deficits that we're running here right now. So I'm not sure that that's a convincing justification.
Yeah, I was speaking to the S&P Global Economist last week, and he actually said the same vis-a-vis the ability for tariffs to generate revenue. I'm going to take you down a different tack because we had this major breakthrough in Jeddah overnight. The fact that Ukraine have in principle agreed to a 30-day ceasefire. We're seeing a reaction in European markets today. What is your reaction?
Well, I think it actually has been a great day for Ukraine because not only does that agreement for a 30-day ceasefire on their part give them renewed access to U.S. military support and intelligence support, but it really puts the ball in the Kremlin's court right now. And, you know, so far we've heard very, very little from President Putin about what he is willing to do to bring peace to Ukraine. And I think there's been no sign at all that he's willing to offer anything in the way of concessions. So we'll see how that plays out. But my suspicion is that this fighting, unfortunately, is going to go on for a long time.
You wrote in one of your reports recently, and thank you for adding me to your distribution list, by the way. It's really good to read your content. But you've written, the focus on ceasefire, security guarantees, and European defense spending is natural, but the real key to durable settlement lies in Ukraine joining the EU. Do you think that that is the necessary condition in order for us to see a lasting peace between Ukraine and Russia? Does Ukraine have to join the EU ultimately?
Well, thank you for the small plug for my Substack. It's called Leading Thoughts. And it is, I think, an effort to point out that, you know, if Ukraine isn't going to get NATO guarantees, the real important movement right now is whether or not it's able to accede to the European Union. I think, you know, in the past, Russia has been very reluctant to let Ukraine out of its economic sphere. With the war that has already happened to a great extent. And I think what we're going to see, you know, if Ukraine is going to be a prosperous economy and have some sort of backing from the European Union, it needs to be a member of the European Union, even if there are no official military commitments on the part of Europe. But I think that at least is what we need to watch to see if Russia is serious about these peace negotiations.
Yeah. Christopher, great to have you on today. Christopher Smart, managing partner and founder at Arbroath Group. South Africa's finance minister will present a revised budget to the coalition government after the previous one was rejected. Enoch Godongagwa was forced to delay his spending plan because of a disagreement over a proposal to raise taxes, sparking concerns about future investment in the country. For more, Jennifer Zabazaja, our Chief Africa correspondent and our friend of the show, joins us now. Jen, okay, so it is a take two for the budget. What should we be focused on this time around?
Yeah, Jumana, some people are calling it D-Day here in South Africa. Look, there is a lot to focus on, but when we talk about really what the sticking points were in this budget that was postponed last month, it's really how the government is going to plug a funding gap here in its finances. So if we take a look at it, there's net new spending, the composition of that, tax increases and potentially what that could look like, and the implications of all of this on economic growth. Right now, if we take a look at South Africa's debt levels, they are just about 76% of GDP, and debt servicing costs, servicing for the debt is actually consumes about 21.1% of gross revenues. And so the focus for the National Treasury is how can they stabilize finances in this economy right now. And one of the ways in which Enoch Godongagwa, as you can see him right there, the finance minister, has proposed to do that is through VAT increases. So you mentioned this 2%. They wanted to take it up from 15% to 17%. That was the sticking point, because if you take a look at some of the coalition partners, and namely the main opposition party, the Democratic Alliance, they don't want to see tax increases. They want to see other ways to reduce spending costs. And so the question will be, what, if anything, did these parties decide to agree upon in the time that they have had to revise this? And also not just that, it's also what are the concessions that were potentially made. We are hearing from some people that potentially there was an agreement on the VAT and how to increase it. But the question will be, what are the details? What are the finer details that they actually got to?
Yeah, so not just the details, but also whether this actual full coalition government agrees to what's in the budget this time around. How likely is it that this budget will get passed? And of course, what happened last time was unprecedented.
Right. Yeah, unprecedented, and many people saying that this could be the most consequential budget since democracy in 1994, because, of course, we are seeing a coalition government coming together, showing that democracy works. But listen, our reporting suggests, as I was just mentioning, that potentially there was some agreement to a lower VAT increase by some of these parties. We did hear from the minister in the presidency who says a lot of these parties have had plenty of time to negotiate and discuss their own points in the time that has been since the last budget. And so she expects the budget will be tabled and then we will see what the revisions are after the budget, because thereafter they get to debate on it. And so it's likely that we will not see another postponement, because, of course, that was a concern for the markets and for the economy and investors alike. But again, it is what did these parties actually agree to, and how will we see a lot of the funding holes, especially now that the U.S. has pulled out some of the funding here for South Africa. How is the government planning on doing that?
Yep. So something to watch later today. Jennifer Zabazaja, our Chief Africa correspondent in Johannesburg, and will be back with us in 15 minutes. Now, coming up, Alpha Data becomes the UAE's first IPO in 2025 with a 600 million dirham listing. We're joined exclusively by the company's founder and CEO next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Alpha Data has become the UAE's first IPO of the year, raising approximately 600 million dirhams. The digital transformation and systems integration company's successful listing reinforces the ADX's commitment to expanding its investment offerings and supporting the UAE's technology sector. Joining us now for an exclusive interview is Fayez Ibbini, founder and CEO of Alpha Data. Good morning to you. Congratulations on your IPO, the successful IPO, and of course, a successful first day of trading with the stock ending up almost 7% higher yesterday. Let me start off by asking you why you thought the timing was right to come to the market.
Not yesterday. Yesterday wasn't a good timing, but generally, yes, we've been doing this or preparing for this for 2 years. So we definitely felt that there was perfect timing in terms of overall story on 2 counts. One is being a public company, provide a much better succession plan for all the stakeholders. It also provides continuity, guardrails, transparency. We had all those things in place, but not in a public domain. So that's what we're really going after. But also we chose to go public for maybe seems a strange reason. We've had 40 years of success, of growth, of profit. And you get to a point where you'd really like to share your success with others. And we felt it'd be really good if we can bring the public and the institutions in with us. And proved to be a good approach that we ended up with something like 7,000 investors joining us and over 100 institutions.
Yeah. So you're pleased with the result. How much of the interest do you think is a reflection of just the broader interest right now from market participants in anything surrounding the ecosystem of artificial intelligence and technology as a service?
Yeah, I think twofold really. One, there is a lot of interest and hunger for technology companies to come to the public market. The UAE market has very, very limited supply of that. So there was a strong welcome for that. There was also strong interest in having a family business transform into a public business. So that was also good and healthy. Being first in the year is also a good sign. AI has prompted a lot of digital transformation in the country and in the region. I think it's worldwide. And we see people investing with no reservation in digital transformation because they're expecting AI to be a major force for growth. And we definitely believe that. Perhaps not the AI that we are thinking about, which is generative AI, LLM, all these like ChatGPT. These are really nice tools. But as agentic AI take hold, I think this is the next wave that we will start seeing. That's when AI starts to deliver rather than being a tool to help, like a spreadsheet, like Excel helps, but it doesn't do anything on its own. We will see that with agentic AI where we can start to trust it to do things.
Let me just ask you, what is next for Alpha Data? Where does the company go from here? And how do you as a company continue to expand?
As a company, we've always worked on the basis that we grow with our clients. So our clients have been growing around the 15 to 20% annually, and we have some very loyal clients. We grow with them. So we see them growing locally in the UAE. We see them growing regionally. So we've opened in Saudi and in Qatar. Our first phase of growth in those countries is actually with clients that are based in the UAE. But very rapidly, we're beginning to talk to people who are very much Saudi companies. I think that will be our next market to grow into, but I would say cautiously. We're a very cautious company. We don't want to jump into something unless we fully understand it, and we don't pretend to understand the Saudi market 100%. So we're going step by step, and I think we will grow there, but the story will be more of a 2026 story.
Yeah. Okay. Fantastic. Well, thank you for shedding light on some of your plans and also a dose of reality, it seems, vis-a-vis what's achievable. Fayez Ibbini, founder and CEO of Alpha Data, thank you and congratulations again on the IPO. Now, coming up, will Ghana's new government be able to pull the country out of its economic slump? Details up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Ghana's new government has vowed to, quote, fix the economy in their latest budget. The West African nation is grappling with high inflation rates and poor economic management. Joining us now is Bloomberg's Ondiro Aganga. Walk us through the highlights of the budget.
Hi, Jumana. So austerity measures is the middle name of this administration. The finance minister, Ato Forson, says they intend to cut government spending by 10% to about $13.2 billion and also boost grants and revenue by 20%. The goal here is to ensure they run an efficient but lean government. They were also bold, scrapping off some taxes that were introduced by the previous administration to raise revenue, including e-levy and betting tax. And instead, they're proposing increasing mining levies on companies' gross output from 1% to 3%. The aim here is for Ghana to benefit from the high prices of gold in the international market. But it's not all doom and gloom. Ever since Ghana received the IMF bailout package of $3 billion, we have seen signs of recovery. The cedi has stabilized. Inflation has gone from a peak of 54% in December of 2022 to 23.1% in February. And the minister says they want to bring inflation down to 11.9% by the end of this year. And they'll do this by stabilizing the currency and also investing in local food production and supply. Another thing to note is that the growth forecast has been slightly revised down to a projected 4.4% from 5.7% last year, which was heavily boosted by government spending and also mining.
Yeah. Bloomberg's Ondiro Aganga in Kigali, Rwanda. Thank you so much for the report. Well, stay with us. In the next hour, we're going to be talking more about those tariffs. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Dazed and confused, investors go on a roller coaster after President Trump threatens to double some Canadian tariffs, only to dial it back hours later. Global levies on all U.S. steel and aluminium imports have now come into force, with no exceptions. Truce agreed. Ukraine accepts a U.S. plan for a 30-day ceasefire after 8 hours of meetings in Jeddah. The White House puts the pressure on Russia, saying it takes two to tango. Plus, second time lucky. South Africa's finance minister unveils a revised budget after the first collapsed in a row over tax. We'll have the details live from Johannesburg. Good morning, everybody. It's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, market's still trying to assess where we're at right now with tariffs and what does this look like going forward, not just over the next few months, over the next few hours and days.
Yeah, two big pieces of news hitting over the last 12 hours, I would say, Jen. You've got the imposition of these global tariffs on steel and aluminium, in addition to the breakthrough that we got in Jeddah and Ukraine signing on to a 30-day ceasefire truce. We just need to see how Russia are going to respond to that. But it is having an impact on markets this morning. So let's get straight to it. Yesterday, we did see a bit of a pullback for Wall Street, but not as bad as the prior day. S&P ending down about 0.7%. NASDAQ, the relative outperformer, down a fraction as well. Today, futures leaning towards the green, despite the fact that the U.S. did go ahead and impose those global tariffs, on steel and aluminium. So this is one of those situations where it's buy the rumor, sell the fact. The market anticipated that this day was coming. Perhaps there was some hope that maybe the Trump administration would change their mind. That didn't happen. And yet here we are, S&P futures leaning towards the green. European futures, however, seen opening up 1%, possibly on back of the optimism surrounding the news coming from Jeddah and the fact that Ukraine has agreed to the U.S. proposal for a ceasefire. Bloomberg's U.S. dollar index up about 0.2%, so seeing a bid come through for the greenback this morning. And then aluminium up 0.3%. We are up 10% year to date. But the last couple of days, we have seen quite the pullback for U.S. equities. So this is a chart I thought was quite interesting, just to highlight that, yes, we have seen a positioning build up in terms of the downward pressure that is growing on the S&P and the index as a whole. We are technically close to a pullback of a correction level, so down 10% from the peak, or not yet, of course, in bear correction territory. But I thought it was interesting to show that according to the RSI, we are still not yet at extreme levels of pullback. So something worth mentioning here as well. All right, let's check in on how markets in Asia are faring too. Avril Hong is in our Singapore studio. Avril, give us a recap of how Asian markets are reacting to all of the news that has come through overnight.
Yeah, I mean, after the imposition that took effect in the past hour, we've been seeing how Asia stocks have been struggling for gains. But that being said, it's a bit of a knee-jerk reaction. The imposition is not something that we didn't already know was going to come. And I think more than just the level of levies that have gone into effect, it's really about this tariff back and forth and the accounting for the retaliatory action, right? And we've just seen something in that way coming from the EU. So amid all this, even though we're seeing a slight rebound on the Japanese, South Korean, Taiwan gauges today, the breadth of the recovery is really narrow. And indeed, we're seeing some of these stock benchmarks across the region either already in correction or near correction territory, including the Australian gauge. Keeping an eye on Chinese stocks as well. Today, we're hearing how these U.S.-China tariff talks are still stuck at really low levels. So again, frustration for investors in the face of all this. What they want to see is perhaps China taking a more serious approach for stimulus. There is a bit of latent AI optimism following the recently concluded NPC. There's going to be a conference later in the week in Hangzhou where DeepSeek was founded. And amid all this, reports that Huawei, Alibaba could be in attendance, and Chinese computing stocks, some of them on the mainland, moving by limit up.
Yeah, well, tariffs is the big story this morning, Avril, and we led the show, and as you were just highlighting, tariffs also been on investors' minds. But now we're just getting some news from the EU. The EU plans to unveil countermeasures on U.S. good exports worth up to 26 billion euros. The EU Commission is saying that they will restore the 2018 and 2020 countermeasures on April the 1st. So these new countermeasures on the U.S. goods will get triggered on April the 1st. But they also add a line saying that they will be open, they will always remain open to negotiation, and that these countermeasures will be introduced in 2 steps. So there you have it. We're getting instant response now from the European bloc to the U.S. administration's decision to impose tariffs on steel and aluminium. As of 1 hour ago, the tariff rate has gone up to 25%. The EU now responding, saying that they too will come up with their own countermeasures on U.S. goods worth up to 26 billion euros. So again, another tit for tat in this ongoing trade war vis-a-vis, this time around, steel and aluminium tariffs.
That's right. Let's just unpack this even more, Jumana. Just an hour ago, 25% U.S. levies on steel and aluminum came into place. Yesterday, what we saw, Washington backed off on a threat to impose 50% duties on Canadian metals. President Trump says the tariffs will bring in a lot of money to the country.
But the biggest win is if they move into our country and produce jobs. That's a bigger win than the tariffs themselves. But the tariffs are going to be throwing off a lot of money to this country. And we've been ripped off for years by other countries, many, many decades. And they were doing the same thing. But I think we'll do it better. And I think we have a bigger advantage because we really are the piggy bank. They weren't.
For more, let's bring in Bloomberg's John Herskovich to dig more into this. John, so we were just hearing Jumana there talking about the reaction to these steel and aluminum tariffs there. Talk to us about the reasoning behind this and how this decision was actually made to impose this, and who is really going to be the most affected.
Yeah, the reasoning behind this is to protect the American steel and aluminum industries. The steel industry has been hurting for a bit, and this is seen as a way to make these key metals in the United States. This is for national security, and this is also to make sure that the U.S. has its own supply of these crucial metals, which are used in so many things. Now, this is a global tariff, so it's hitting friends and foes alike, from Europe, Japan, South Korea for the friends, China, Russia for those who are a bit more adversarial with the United States. And the one worry is how this is going to hit consumers. These metals are used in so many different products, from automobiles to beverages to steel pipes for the oil industry. So there's a lot at play going on. We've had this in Trump's previous administration, so governments around the world have some idea of what happens and how to respond, like we've seen with the European Union just a few minutes ago.
Absolutely, and investors are trying to weed through what exactly is coming next. What's your insight telling you?
Yeah, it's going to be difficult to see, as we saw with the levies on Canada today, which it's just part of the whiplash that what's imposed goes out. Some things which are planned stay on, and it's really given investors difficulty in trying to gauge what's going to come next. But we do have one thing that's on the horizon. We have April 2nd, the announcement of so-called reciprocal tariffs, which could again hit U.S. partners and adversaries, and how that's going to play out is really difficult to see. But this is another round coming. It's on the horizon. Their details are still being worked out, but we could see things from semiconductors to copper, a whole range of products and commodities which could be affected by these reciprocal tariffs coming in just a few weeks.
Yeah, Bloomberg's John Herskovitz there with the update on the tariffs. John, thanks so much for your reporting.
All right, let's talk more about the market reaction. Joining us is Sharma Ong, Aberdeen's head of multi-asset investment solutions for Southeast Asia. Well, Ray, the backdrop to the tariff announcement from today was anyway markets were already in sell-off mode over the last couple of sessions. Is this just going to add fuel to the fire?
Well, we think that the nations that are impacted by tariffs will respond. We actually see the following process happening. First, an escalation by the U.S. imposing tariffs, and then retaliation by the nations that have been affected. And then this actually would bring both nations together to start discussion. So a third phase, which is negotiation, and then potentially de-escalation. So we are actually only at the first phase, moving into the second phase, but we think this will eventually unfold in that sense. So markets, in the end, I think will be able to price that down the road.
Yeah, so what do you think this all does to market sentiment? Yesterday we were talking about the sheer amount of uncertainty that's in the air, and then you combine that with the slowdown and some of the U.S. data that's been emerging. What do you think that does to investors' willingness to put on risk in the next few months?
So the key things in play right now are, like you mentioned, tariffs, the recession concerns or the slowdown, as well as fiscal policy risks from the U.S. So combining this, we have actually seen a large sell down driven by momentum on that end. Now, what investors haven't priced in, which we think will start to see sentiment change, is the Fed. And the Fed really hasn't said anything, and for good reasons. They're in blackout window now. If you take a look at where markets are, markets haven't priced some form of an insurance cut by the Fed next week. So I don't think we should rule that out. But Fed narrative at the conference will indicate whether this is something they'll take action on. If policy rescue is going to come in to help with growth, I think that will change the narrative on that end. And I don't think the Fed wants to engineer a recession.
Interesting you think that an insurance cut out of the Fed can't be ruled out next week. Let me ask you why, and what would incentivize the Fed to do that, especially in light of today's important inflation print that's coming up?
Yes, so several factors. One, an insurance cut could be in play should this tariff play, the first stage of escalation, linger on. So if the Fed does have that view and it's going to lead to a stretch on growth, potentially maybe an insurance cut would be in play. However, having said that, even if they don't, I think the narrative at the press conference post-FOMC meeting will drive a lot of that view. The second thing is on inflation. Yes, we do expect actually inflation or disinflation trend to moderate. So we actually expect inflation on a month-to-month basis coming in at today's print at about 30 basis points, which would be a moderation from 40 basis points, which is what was printed last month in the core CPI print. So this gives Fed a lever to actually potentially consider some form of early easing.
Yeah.
We do like opportunities actually. We do like opportunities outside of the U.S. in addition to certain spaces in the U.S. Right now, three key areas to highlight. We think Europe can do very well. We think China as well as India can do very well. For Europe, you have de-escalation between Russia and Ukraine that was going to help ease geopolitical premium, that's going to help ease off all European terms of trade are going to improve, the euro dollar is going to strengthen, and the fiscal stimulus by Germany as well as more defense spend is going to help lift that boost. China, a lot of fiscal stimulus from the two sessions. You compile that with China's stock market support program and monetary stimulus, you have the trifecta actually supporting that market. And for India, if tariffs do escalate, India actually has very low exposure to goods exports to India, to the US, I mean. So that is actually one of a safe harbors to potentially invest in, and it's not reliant on tech growth. So you also diversify away from that. So three areas: Europe, India, and China.
Okay, very, very clear. Thank you so much for coming on our show today. Sharma Ong, Aberdeen's head of multi-asset investment solutions from Southeast Asia. Thank you. Well, still ahead, our exclusive interview with one of Africa's largest banks. But up next, there is a deal in the desert, but will President Putin agree? Details on the latest in the Russia-Ukraine ceasefire next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Ukraine has accepted a U.S. proposal for a 30-day truce with Russia in exchange for a lift on its military aid freeze. President Trump says the ball is now in Russia's court.
Ukraine has agreed to it, and hopefully Russia will agree to it. We're going to meet with them later on today and tomorrow, and hopefully we'll be able to wipe out a deal. But I think the ceasefire is very important. If we can get Russia to do it, that'll be great.
U.S. Middle East envoy Steve Witkoff is due to travel to Moscow, where he is expected to meet President Putin this week. Bloomberg's Russia economy and government editor Greg Sullivan joins us now. Well, it was only a couple of days ago that President Trump was labeling President Zelensky as a dictator and someone who wasn't serious about peace. And here we are, the Ukraine delegation agreeing to the U.S. proposal to a 30-day truce and potentially to a longer ceasefire as well. How did this turnaround come about?
I know, it really is a bit of whiplash here, quite a turnaround. But a lot of it is due to the fact that the White House was heaping pressure on Zelensky. After that disastrous White House meeting, they suspended aid, military aid, as well as intelligence sharing. The U.S. is a critical supporter of Ukraine, and they need that. So that was a very sensitive issue. Rubio showed up, the U.S. Secretary of State Marco Rubio showed up saying that they were looking for concessions, looking for where Ukraine could make concessions. So an immense amount of pressure. But Ukraine also knew they had to show up and deliver something. They were looking to tamp down tensions with the White House and improve the situation. They were looking to engage. So they were incentivized to reach some
What
sort of
is the
deal.
likelihood Russia actually sign on to this deal now?
Well, that's the key question. And as Trump said, the ball is now in Russia's court. We know a few things. One is that the reaction from Russia so far has been rather muted. We'll know a lot more soon as the U.S. envoy Steve Witkoff is expected to travel to Russia and meet with President Putin, so we might know more about their reaction from then. But this ceasefire deal that was agreed to between the U.S. and Ukraine does not meet any of Russia's previous demands or what they've staked out as conditions for some sort of truce.
Is it likely that we're going to start seeing more American pressure applied to Russia now that Ukraine have agreed to the deal?
It's entirely possible. Up until now, we've seen the pressure pretty much one-sided. It's been very heavy on Ukraine, whereas they have not been asking for concessions from Russia. But if Trump's stated goal of reaching a ceasefire fast is not met, then it's entirely possible he could start heaping pressure. The real question is, how does Russia react? And does Putin want to take this moment of opportunity to engage with Trump, or does he want to hold out for his maximalist demands? And that's something we'll be watching closely.
Yeah. Greg, thank you so much for the overview on this Jeddah breakthrough. Bloomberg's Russia economy and government editor Greg Sullivan. Now, coming up, our exclusive interview with one of Africa's largest banks. Absa Group's interim CEO joins us after their earnings beat estimates. This is Bloomberg.
Absa Group has reported profit that exceeded estimates with a headline earnings increase of 9.9%. Strong consumer demand in South Africa helped the bank counter challenges it faced in other parts of the continent. Joining us now for an exclusive interview is Charles Russon, Interim CEO of Absa Group. Charles, great to get you on the show this morning. Let's just start here in South Africa today. The expectation is that we'll get a budget tabled by the finance minister. What does the business community want to see from this budget?
Yeah, good morning, Jennifer. And absolutely right. Today is a huge day for South Africa after the budget speech was postponed a couple of weeks back. I think, first of all, we see that as a good thing, that there was accountability and really that the government of national unity had to actually work to get to an agreement. In terms of this budget, I think, we need to see growth, but ultimately inclusive growth is obviously a key element to deal with unemployment. But at the same time, striking that balance with responsible fiscal management is absolutely key. So we need to see reduction of debt. They need to tackle some of the difficult trade-offs in this budget. And I think ultimately they've got to remove some of the wasteful expenditure.
Well, Charles, talk to us about what that means then for investors that you speak to, because we did see JP Morgan earlier this week cut their outlook for SA equities. What do investors want then?
Look, I think at the end of the day, investors, the key for them is they want certainty. They want policy certainty. They want fiscal certainty. And ultimately, they want an environment that is conducive to growth. So that is the fundamental of what they're after. I think, South Africa at the moment, we've gone through a period, probably last 10 years of low GDP growth. We're expecting, probably 2% GDP growth, 2025, 2026. So it certainly feels a bit better, but we do need the certainty coming out of today.
Do you have any expectations, though, for the VAT increase, or is that not something you're focused on?
Yeah, look, obviously we see the debates and clearly we can't comment on exactly how they raise their taxes, but clearly it's going to be an item of real interest. But, hopefully we get to consensus today and there's an outcome from it, because the lack of certainty, I think, would be the biggest challenge for us.
Charles, let's just talk about some of the other markets where Absa has operations. That includes Ghana, which had their budget yesterday. Also Mozambique, which the bank actually said you were a bit concerned about. When you look at the portfolio for the bank, what are your concerns with these countries?
Yeah, look, Africa for us is where we play. We're a regional bank across the continent. It's strategic to us. And we see it as our competitive advantage. We've been in a lot of these countries for about 100 years. So we're part of the DNA. It's part of our DNA. As we're seeing some of the global banks starting to pull back, we believe it's an even greater opportunity for the regional players to ultimately facilitate business into the continent. So Africa is enormously important to us. Yeah, as I highlighted yesterday in my speech, I think, you see different things in different economies. You've had sovereign distress that's played out in certain markets. Ghana's starting to emerge on the other side. We had some of our own specific issues there where because it's a big business for us, we had to deal with hyperinflation accounting, but hopefully that's behind us this year. And then you've had drought in a country like Zambia, which has been, of a different level and scale. Hopefully that is now on the other side of it. And then Mozambique, post the election in December, certainly, that was a difficult situation that played out with some of the violence there. So, but at the end of the day, right, we've got a large footprint across the continent, and right, we believe, we can facilitate a lot of business. And we understand from time to time there will be challenges in different markets, but ultimately, in the long run, it plays through in the right way.
Charles, last question. We only have 30 seconds here. Any plans to expand outside of the continent, similar to what we saw in 2024 with the expansion in Beijing?
Yeah, from an international perspective, those are rep offices. ultimately, we've got a rep office in the US, we've got a rep office in the UK. We're looking at Dubai at this present moment, and as you highlighted, we've got China. So we want to connect the rest of the world to Africa and people who want to do business there.
Thank you so much, Charles. We have to leave it there. Charles Russon, Absa Group's Interim CEO, thanks so much for joining us. We have plenty more coming up on Horizon. Stick with us. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. Dazed and confused, investors go on a roller coaster after President Trump threatens to double some Canadian tariffs, only to dial it back hours later. Global levies on all U.S. steel and aluminum imports have come into force with no exceptions. Truce agreed. Ukraine accepts a U.S. plan for a 30-day ceasefire after 8 hours of meetings in Jeddah. The White House puts the pressure on Russia, saying it takes two to tango. Plus, second time lucky, South Africa's finance minister unveils a revised budget after the first collapsed in a row over tax. We'll get the details live from Cape Town next. It has just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabisaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizon's Middle East and Africa. Lots of news to digest this morning from the tariff implementation. We now know that those tariffs, those global tariffs on steel and aluminium imports into the U.S. have now gone into effect. So those are affecting tariffs globally. In addition to that, we had that breakthrough from Jeddah overnight with Ukraine signing on to the U.S. proposal to that 30-day ceasefire with a promise to keep the talks going vis-a-vis a potential longer and permanent ceasefire as well, waiting to see how Russia responds. So all of that to digest just in the last few hours. This is how markets are reacting this morning. We did see a bit of a pullback yesterday for Wall Street, less intense than we had the prior day, but S&P still ended the day in negative territory, down about 0.7%. NASDAQ down a little bit as well. Today you can see futures are leaning towards the green, up 0.3, but Euro stocks, European index, really looking like it's going to open in strong territory, up more than 1.1%. This on back of that optimism vis-a-vis Ukraine and the potential for a de-escalation of tensions over there and the end potentially to this 3-year war. So European stock futures seen opening up 1.1%, very strong. The USD is seeing a bit of a bid today as well, bucking the recent weakening trend. So we're up 0.2%. And then aluminium in the eye of the storm, up 0.3% today, but we are up around 10% year to date for that base metal. Switching over, though, I do just want to point out, yesterday we spent a good amount of the show talking through the global risk-off sentiment that has gripped markets with that big pullback in S&P, NASDAQ, Magnificent 7, some of the key tech stocks coming under selling pressure, a big rally in fixed income. But look at what is happening in some of these key credit spreads as well. High-yield spreads have actually started to widen, and that wasn't the case up until around a couple of weeks ago. So it tells you that this risk-off sentiment, concerns about global growth, are now percolating into other assets as well, not just specific to equities. Okay, let's check in on markets in Japan now. Avril Hong is in our Singapore studio. Avril, what's on your radar?
Yeah, we've been talking a lot about Chinese and the rest of Asian assets, so I thought we'd just focus a bit on Japan, this part of the program, because we're seeing stocks there rebounding as the yen's rally takes a bit of a breather today. And then you had Trump, right, downplaying the threat of a U.S. recession, so that's also helping some of the Japanese exporters. But note as well, today we heard from the BOJ Governor Ueda, and he kind of sounded quite unbothered about these yields that we're seeing in Japan, the highest levels for years. So it looks like a green light for more rate hikes, setting us up for a hawkish hole, though, for the BOJ next week. Flip the board, because all that is playing out in Japanese bank stocks today. We're seeing a gauge of them climbing by the most in about 3 months. And whether this has further room to run, if you look at this chart courtesy of MLI's Mark Cranfield, it looks like it's the case, because these higher JGB yields, there's that strong correlation, as you can see, in the past year or so with these Japanese bank stocks. They tend to do well in that environment. So something to keep an eye on as well.
Yeah, I like it. I like the Japanese focus. Avril Hong in Singapore, thank you so much. Now back to the region. Attention is turning to Gaza ceasefire negotiations in Qatar after direct talks between the U.S. and Hamas sparked concerns in Israel. Hamas says a new round of talks started yesterday, with Israel demanding the militant group release half of the remaining hostages in return for a promise to negotiate a lasting truce. Let's go to Jerusalem and speak to Bloomberg's Dan Williams. We've been talking about the ongoing ceasefire discussions. That Israeli delegation headed towards Doha to further those discussions yesterday. What do we know about the state of those ceasefire talks, and what actually does success look like here, Dan?
Excellent question. There's actually been little formal fanfare from either side, either because these are very serious talks or because neither side wants to boost public expectations of a breakthrough. It's very hard to tell at this point. Hamas putting out a statement yesterday, essentially restating its position that it's willing to go to the so-called phase 2 truce talks. I think we can decode this, and we should decode this at this point. Phase 2 was meant to be the phase at which the sides describe how a post-war Gaza will look. Israel, with the support of the United States, says a post-war Gaza will be free of Hamas, whether as rulers or as an armed military force that could threaten Israel. Hamas has given very little indication that it would comply with this vision, so it's very hard to know how to proceed. Now, we understand that Steve Witkoff, the senior U.S. troubleshooter on this matter, will be coming to Doha today, so that would make these pretty much the critical juncture in this stage of talks. It's worth remembering he's a busy man. He's also been dealing with the Russia-Ukraine file. So if indeed he does turn up, if indeed he does officiate, I think he will expect some kind of breakthrough, or he will part ways with this round himself very quickly.
Yeah, well, the U.S. troubleshooter or the Middle East envoy, Steve Witkoff, is going to have a busy week because he's also slated to fly to Russia towards the end of the week as well. So lots of ceasefire discussions taking place. Dan, let me just ask you about something else, because the Houthis seem to be back in the picture again, and they are threatening to start firing once more at Israeli-linked vessels. What does this tell us about the precarious state of the regional ceasefire?
I think this is a reminder that in addition to the ticking clock on diplomacy that's been staggering long, there is also a humanitarian ticking clock in the Gaza Strip. Certainly the Israelis would point at the conditions or the plight of their 59 hostages being kept in unknown states and unknown locations as a major humanitarian concern. Another humanitarian concern is the 2 million Palestinian civilians who have now been deprived of imports of aid and commercial goods and of a source of electricity from Israel, which powered a desalination plant. Now, while it appears that the Palestinians in Gaza do have stockpiles for the time being, those will run out eventually, and we'll be hearing increasingly about the humanitarian straits of Palestinians there. The Houthis aren't waiting in what they're calling an act of solidarity with Gaza, with the Palestinians. They've now threatened to attack or resume attacks on ships. This will focus the minds not only of Israelis, but also of anyone using the Red Sea waterways, given how disruptive this was proven to be last year when the Houthis last did it. The Houthis have yet to say they'll resume direct long-range attacks on Israel, but nonetheless, this is an indication that Hamas's allies in the region are losing patience.
Yeah, most definitely. Bloomberg's Dan Williams in Jerusalem. Thank you for putting that on our radar.
Let's turn to South Africa now, and the country's finance minister will present a revised budget to the coalition government after the previous one was rejected. Enoch Godongwana was forced to delay his spending plan because of a disagreement over a proposal to raise taxes, sparking concerns about future investment in the country. For more, there's no one better to talk to than Bloomberg's South African Parliament reporter, that's Paul Vecchiato, who is in Cape Town ahead of the presentation just down the street. Paul, talk to us about the key areas that we should be focused on here.
Right, so we're going to look for an increase in value-added tax. His proposal of a 2 percentage point increase 2 weeks ago was outright rejected by part of the government of national unity or the coalition. And that caused him to withdraw his budget proposals and to rework them, and they had and the other parties demanded a review of government expenditure. The VAT proposals were to raise around about $3.3 billion US. So the big question is, what is it going to do? Because the VAT proposals could really dampen consumer sentiment and have an overall effect on the economy as well.
Paul, talk about the likelihood that we'll actually see a consensus and an agreement this time around, especially considering there's now been a few weeks in between that these parties have been able to negotiate. What's your expectation?
Well, my expectation is they've all agreed that the budget will be tabled today. However, the final vote on the budget is scheduled for 23rd of May. So there's quite a lot of parliamentary process through the finance committees and the other various departmental oversight committees before a final vote is taken. So we may see some changes to it, but the budget will definitely be tabled today. There's also a cabinet meeting that's supposed to start in about an hour's time, where they will discuss the budget and hopefully iron out any differences then.
All right, we'll watch very closely for that. Bloomberg's Paul Vecchiato there in Cape Town. Paul, thanks so much for joining us. Let's go now to Ghana. Ghana's new government has vowed to, quote, fix the economy in their latest budget. The West African nation is grappling with high inflation rates and poor economic management. Joining us now is Bloomberg's Ndiro Oganga, who's been following this story. So, Ndiro, in what ways did we see this budget actually highlight the government's plans to fix the economy? The new government, we should know.
Hi, Jen. So if we look at this budget, you can say that austerity measures is their middle name. The Minister of Finance says that they intend to cut government spending by 10% to about $13.2 billion. And also they want to boost revenue and grants by about 20%. They are committed to running a lean and efficient government. And also they want to cut down on some of these taxes. It's proposing scrapping off e-levy and also betting tax, which were taxes that were introduced by the previous administration to try and raise revenue. Instead, the Minister of Finance is proposing increasing mining levy on companies' gross output from about 1% to 3%. And the goal here is to ensure that Ghana benefits from the high prices of gold in the international market. But then when you look at it from inside out, or rather outside in, you see that there have been signs of recovery in this economy ever since they got the $3 billion bailout package from the IMF. We've seen the currency stabilize. Inflation went from a peak of 54% in December of 2022 to about 23.1% in February. And the Minister of Finance wants to bring it down further to 11.9% by the end of this year by stabilizing the currency and also investing in local food production. They're projecting economic growth this year to be about 4.4%. But then again, it's very important to remember this is an economy that has been battered for nearly half a decade. It will take more than one budget in 1 year to turn things around.
Absolutely. Ndiro, what more did we get about the government's approach to debt servicing and repayment?
Jen, there's an agreement between the president and the Minister of Finance and many members of the NDC party that they inherited empty coffers, a dilapidated economy that is currently grappling with the debt crisis. If you look at state-owned enterprises knee and neck deep in debt, Ghana Electricity Company owes 68 billion cedis, Ghana Cocoa bought 32 billion cedis. And also, surprisingly, the central bank is seeking a bailout of 53 billion cedis because of its negative position. On top of that, over the next 4 years, Ghana needs to pay 150 billion cedis, which is about 11.6% of their GDP in the domestic debt exchange program. And about 8.7 billion shillings is going to external investors. All this while they're locked out of the international capital market. So what they're doing currently is just trying to manage their budget domestically so that they can grow the economy but also not sink themselves deeper in debt.
Bloomberg's Ndiro Oganga in Kigali for us covering the Ghana budget. Ndiro, thanks so much for joining as always. Now, coming up, former president of the Philippines, Rodrigo Duterte, is set to face the International Criminal Court in The Hague. We'll discuss the impact on the country's political landscape and economy next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. The government of the Philippines has arrested and deported former President Rodrigo Duterte to face the International Criminal Court in The Hague. The move came just over a month after the impeachment of his daughter, Vice President Sara Duterte, by allies of the current president. The political rift between the Marcos and Duterte families is posing a threat to growth in one of Asia's best-performing economies. Bloomberg's Manila bureau chief, Manolo Serapio, joins us now. Manolo, this feels like a pretty significant event. Just walk us through what led us to this moment and to the calls for the arrest of Mr. Duterte.
Indeed, it is basically the solid turning point in this in the ongoing political feud between the Marcos and Duterte clans. So what happened was the former leader's daughter, who is the vice president, was impeached by the allies of President Marcos last month. And then just over a month later, as you said, he was arrested yesterday morning when we came back from a Hong Kong trip at the Manila airport. And hours later, he is put on a flight to The Hague to face charges of crimes against humanity. Obviously, this, of course, this is related to his drug war when he was president of the Philippines between 2016 and 2022. And so what we expect now is for the former leader to land in the Netherlands a few hours from now, and we'll see what steps will happen next, because the International Criminal Court has said that it will probably schedule another hearing, but no details on those yet.
Okay, how much of this is a feud between the Marcos and the Duterte family versus the possibility for it to blow out into something much bigger and for it to create bigger political repercussions within the Philippines economy?
So for now, we have seen this. We have seen this rift between the two families, the two major political families in the Philippines, deepen in the past months, in the whole of the past year actually, but we haven't really seen any impact on the economy yet. But the thing is, we have this midterm elections coming, legislative elections coming in May, and this could be crucial into how Marcos will be able to get that support in the legislature to be able to accomplish what he needs to in the remaining 3 years of his term. And right now, in terms of political unrest, we haven't seen any. So last night, when this was unfolding, hundreds of Duterte supporters were held a prayer and vigil rally outside the air base where he was detained briefly, and then some thousand other supporters also converged in this bailiwick region of Mindanao. But other than that, we haven't really seen the type of groups or huge groups or unrest that we've seen during in 1986, when the current president's own father was pushed out via this People's Power Revolution.
Yeah, interesting historical context. Thank you so much for bringing us that important report. Manolo Serapio, Bloomberg's Manila bureau chief. Coming up, China piles up pressure on India in its own backyard. Details up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. India's Prime Minister Narendra Modi is in Mauritius for a 2-day visit. He's expected to attend the country's National Day celebrations as a chief guest later today, as New Delhi looks to reinforce the region's importance to India. New Delhi is amongst the largest trading partners of Mauritius, but the visit comes as China looks to increase its presence in the region as well. And Beijing's power play in the Indian Ocean is alarming New Delhi. Let's now bring in Sudhi Ranjan Sen, a Bloomberg's government reporter. So give us context around the Indian Ocean region. Why is it so important? And why are both China and India vying to build a presence there?
Well, I mean, if you look at the region, it's home to about 3 billion people, starting from the Horn of Africa. It's also got about 40% of the world's petroleum reserves. It's got about 6 main maritime choke points of the world. And also straddles the main, so to say, the trade routes between Europe, Africa, India, and South Asia. So that kind of gives us a context of how important this is. And both growing economies, India and China, of course much ahead of India, are kind of are jostling for dominance in this region. And you also have global powers like the United States interested in it as it pivots to Asia, and other European powers like France also present.
So what has been the response of India to China muscling in that part of the world?
Well, if you look at it, it's been a bit of a patchy response if you look at China's, the way China has been able to get in. And we call it, our reporting, our colleagues and my colleagues who've been doing the reporting, it is patchy because if you look at, if you look at what China has done, it's kind of invested billions of dollars in numerous projects starting from the Gulf, the eastern coast of Africa to Malaysia in the east, poured in billions and billions of dollars. If you look at infrastructure, China has invested in 46 ports, 36 out of which can, harbor military warships. So that's the context. What has been India's response has been very patchy. India, cannot match up with the financial might and the muscle that China has been pulling in. It's largely been depending on its cultural and, historical ties, although it is also trying to, invest in infrastructural projects in these, in these island ocean countries, trying to stay in the race. But net, India's response has been very, very patchy.
Suti Ranjan Sen, Bloomberg's government reporter in New Delhi, getting us up to speed on Modi's visit to the Indian Ocean to Mauritius. Thank you so much. Now, U.S. sanctions on Russia's oil tanker fleet are showing signs of faltering after blacklisted vessels loaded cargoes for the first time in more than a year. Washington's measures have been instrumental in restricting Moscow's ability to ship oil and raise funds for the war in Ukraine. But in recent days, 3 blacklisted vessels have loaded cargoes and sailed from the country's main regional ports. And you've got to wonder whether all this, perhaps the lighter enforcement of sanctions on Russia, ties into the broader discussions that are happening right now vis-a-vis that Ukrainian ceasefire deal. A breakthrough yesterday in Jeddah with Ukraine agreeing to that proposal put through by the U.S. to a 30-day truce and the potential to open it up to a more permanent ceasefire as well, and the resumption of U.S. military support alongside intelligence sharing. So major breakthrough in Jeddah. We also this morning had the imposition of global steel and aluminium tariffs introduced by the U.S. government. S&P futures leaning to the red, Euro stocks up 1.2% on positivity around Ukraine. But that is it for Horizons Middle East and Africa. I'm Jumana Bersetchi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.